With some major economic news just around the corner, is Bitcoin preparing for a correction or could we expect a continuation upward? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be doing a complete short-term technical and structural analysis, going over the immediate price action, the next possible moves, and whether or not Bitcoin will likely see a correction or continuation upward to 48k. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It will be the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic data. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, trading chart and education chat, trade setup, news, help, and daily video chat. If you're interested in getting access to all of this, go ahead and contact me via the pinned comment in the free channel for more information. Let's go ahead, guys, and dive right into the video. Starting on that market data, how are we looking? So 24-hour volume. It is sitting at 122 billion. This is down 11.28% in the last 24 hours. And with that, we can see liquidations have dropped a little bit, down 25% in the last 24 hours. But by all means, still sitting at a considerable 153 million. Of the 153 million, we can see 82 million have come from long positions and 71 million have come from short positions. If we do take a look at the last 24 hours or so of price action, we can see basically the last 24 hours has been nothing but chop. We've seen a large, or not really that big of a move, but on the short term, it is quite a large move toward the downside. We saw a equal move back to retest those highs, and we've been chopping sideways ever since. So really playing on the side of the neutral side over here, liquidating both longs and shorts on higher leveraged positions. So pretty interesting to see. Of course, we'll come back and take a look at this in more detail in just a moment. Moving over to the volatility index, we can see on the 30-day, the volatility has started to increase again. Again, we have seen quite a large move in price action. And on the 60-day, we can see that volatility index is still steadily moving upwards. Again, that is a good thing. We do want to see the volatility index move upwards with the price action. Moving over to the DXY, the DXY has seen a short-term correction, coming back down to retest that 103.5 to 103 support zone. Again, a loss of this level will result in a continuation lower towards the 101.5 level. This will be very, very bullish for the markets. Again, until we have lost that support, support is support until it is not, and we could expect a potential bounce from over here. Moving over to the S&P 500, the S&P 500 has broken above the macro downtrending diagonal resistance. Again, this is a absolutely significant breakout over here, and in 22 hours time, we're going to see that weekly candle close. And if we do close above this level, it will be validating this trend line as an area of support and initiating a higher time frame breakout. And this is a breakout of a 1.5 to 2 year long downtrending diagonal resistance. And if we do break from this level, we could expect a gradual climb towards that all-time high price at around 4,800. Incredibly bullish stuff. Looking at the Dow Jones, we can see a similar expectation of the S&P 500. The Dow Jones does appear to be a few days over here in advance with the break of the weekly candle and close already in the prior week, and in this week it does appear to be moving towards that all-time high, already breaking over that weekly close point we saw all the way back over here in January 2022. So it does look fantastically bullish over here. Again, if we are able to clear this gap between a 36.8 30, and of course this weekly high, we are going to be entering this price discovery zone, this all-time high zone where the price could definitely continue much higher. Again, if the Dow Jones continues upwards, if the S&P 500 continues upwards, we are likely going to see Bitcoin follow suit. Looking at these markets again, we do have these structural levels of support represented by these diagonal levels. A loss of these levels on both the Dow Jones or the S&P will result in a false break above these levels and a continuation lower. Moving over, we do have some important economic data to be taking a look at. The main key points are going to be, of course, today, in about 12 hours, we have our NFP and unemployment data. This is going to be very important for the Dow Jones, for the S&P, for the traditional markets, more importantly, the DXY. And of course, tomorrow, on the 12th, so we have our inflation data. On the 13th, we have our PPI data, and the most significant one, on the 14th, we have the interest rate decision, guys. And again, if the interest rates start moving up again, this will be very bearish for the markets and likely send risk assets down. If the interest rates move sideways, the bullish narrative will maintain and the asset prices will likely continue upwards for another month. And if the interest rates pivot and move negative, move downwards, this is going to be very bullish for asset prices, and we'll likely see the S&P 500 and Dow Jones break their respective all-time highs, and we'll likely see Bitcoin push into this 48k region. So very key few weeks coming up, very important stuff to be paying attention to moving forward. So before we get into the Bitcoin analysis, a quick word from Bitget and BingX, and we'll jump on right in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into the Bitcoin analysis. And as we said in today's video, we're going to be focusing a lot more on the short-term price action. What is really happening between the price points of $40,000 and 46 to 48. As we explained in yesterday's video, we have a range of price action essentially moving between two key points. The 40,000 to 38,000 support level, okay, that is going to be reflected as this massive red box on the higher time frame chart, this level over here, and the upper level, which is going to be the 48 to $46,000 resistance. So the current price is moving between this higher time frame range between these two key points. As you can see, we broke above 40,000. We have moved in this uptrend, moving towards that 46k level. The big question is, will the short-term trend sustain? Will the price continue into this upper level of resistance before rejecting? Or will we see a premature rejection and correction before we reach this upper level of liquidity, which is sitting at 46 to specifically $48,000? So let's go ahead and discuss the likely directions, the likely moves, and what the price action is currently showing us. So first and foremost, let's go ahead and identify our key structural levels. We have an overall uptrend. The overall uptrend is reflected by this uptrending diagonal trend line. Okay, this is going to be our overall uptrend. Of course, we've validated this uptrend now with 3 points of retest. We have point number 1 with a trend initiated before the break of the Gaussian channel. We have point number 2 before we saw that large impulse upwards, and we have point number 3 of our retest. So we've got 1, we've got 2, we've got 3, we've got a validated trend. This diagonal trend line reflects the overall upward trajectory of the price action since the breakout of 40,000. This reflects our overall uptrend. If we had to flip the chart, you would see this would reflect the overall downtrend of the price action. And therefore, this diagonal trend line is acting as a trigger point between bullish, okay, on the short term, and bearish on the short term, meaning a break below this diagonal trend line will flip the trend into a short-term downtrend. While we remain above this trend line, the upward trajectory of the price action remains intact, and regardless of if we see a correction down to this level, we will likely still see a continuation upwards into our next resistance, provided this level of support holds as support. So to summarize everything from this one trend line really quickly from a structural perspective on a diagonal scale, while we remain above this trend line, this is going to be our uptrend territory. While we remain below this trend line, this is going to be our downtrend territory. Perfect, nice and simple. Let's go ahead and identify our key trigger points and targets for our continuations. From a diagonal perspective, we do have a downtrending resistance on our shorter time frame chart reflected by this downtrending arrow. This, of course, is going to be a bullish trigger for a continuation through this range and potentially upward. If we take a look from a horizontal perspective, we can see the $44,000 level. The 44,400 level is acting as a bullish trigger on a horizontal scale for a continuation upwards. We can see on the VIPV, we can see a significant drop off after this point, again indicating we would expect volatility to pick up if we are able to break above this local high. So in the short term, if we want to see the bulls reclaim control, we need to see the price break above this downtrending diagonal trend line. If we want to see the price potentially move upward aggressively to 46k, which is going to be our first target, we do need to see 44.4 break over and clear this local high for a continuation upwards. Now, the reason we are saying for the bulls to take control on the immediate short term, we can see we do have a degree of weakness showing. We can see the price is retesting the 50 EMA, and we can see the price has broken back into the Gaussian channel. That signifies this cluster of price action right over here that I've circled in respect to all of this price action over here is signifying a degree of weakness. It is telling us we are starting to see exhaustion develop in this trend. This exhaustion has not quite pushed it into a downtrend. This exhaustion has not quite flipped the trend bearish. However, on the smaller time frame chart, excuse me, that exhaustion is present, and while it is present, we do have to be aware of the risks that could actually bring us if it does flip the trend. So let's take a look at this. As we've said, we are in a shorter time frame downtrend. We have our horizontal trigger. Let's go ahead and identify these points really quickly. So again, this is going to be bullish trigger. We'll say BT equals 46k. Okay, we have, of course, this downward diagonal trend line. This is going to be short-term bullish trigger equals 44.4, okay? And of course, we have our uptrending support level, which is going to be this treble here. Uptrending, let's go uptrending support, again, equals bullish / bearish trend flip. Okay, awesome. We've identified these levels. Let's go ahead and take a look at lower targets. If we look at the VRPV again, we can see we have a significant gap in the VRPV from around 43,000 to around 42,000. So 42,000 is going to be a key structural level of support. We'll go ahead and identify that as a horizontal level. And of course, we can also see we have that trigger point sitting around 43,000, which is going to be that local low of the current consolidation range right over here. So what we can say is, if we fail to remain above 43,000, we are likely going to see a correction down to retest the uptrending support level of that diagonal uptrend represented by the uptrending support. So if we lose that 43,100, 43,150 level, which is a local low, we would expect a retest of this uptrending diagonal support level, a possible wick towards 42,000, but likely this area will hold as support. If we do retest this level, the uptrend will still be intact, expecting a bounce and continuation upwards. These trigger points, whether it be that diagonal trend line, would extend and still remain valid over here instead of being over here, and this horizontal level at 44.4 would remain valid regardless if we retest it over here or if we retest it over here. Now, these levels are within a visible range in relation and context to the current uptrend. So the price action breaks below this uptrend and validates a breakdown by breaking under 42,000. Okay, a break of 42,000 will validate a break of the uptrend. These levels will now no longer hold immediate significance. If we do break toward the downside and we lose 42,000, we would then expect the trend to flip. And just as we have a uptrend over here with the expectation that the uptrend will continue until the price reaches the next level of resistance, which is 46,000, if we flip the trend and we break this downtrending trend line, we would expect the price to continue upwards until it reaches that next level of demand, which is going to be, in this instance, 40,000. So a break of this trend line, a loss of 42,000 would result in a correction to 40,000 US dollars. Zooming out, 40,000 US dollars is going to be a major area of support. We can see the 40,000 to 38,000 level acting as a major area of support. The bears will only take high time frame control for Bitcoin if $38,000 is lost. If we lose $38,000, that is when we have deviated above this midline of resistance, and we will likely see a high time frame correction, potentially to 32K. Do I think that is possible? It technically is possible. However, according to our charts, if we zoom out again and bring back all our old charts over here, it would be massively unlikely. So let's go ahead and just bring back some of these charts. We'll have to go really slowly with my keyboard's not working for some reason. And I just want to go back to our initial charts. We'll show you in 1 second, guys. It will be this chart over here. Perfect. If we look at this chart over here, we can see on a higher time frame that 38K, where is it? 38K, here it is. The dotted trend line is going to be a high time frame support, but it also is acting as a bearish trigger. So a loss of this dotted trend line will also likely result in this major uptrend, right? This trend line here is the major uptrend. This is going to be our short-term uptrend. The one we're looking at is this one over here. Our major uptrend to be retested at 38K, and if lost, we then fill the range between this dotted trend line and this dotted trend line, potentially pushing us down to our bearish trigger. So a lot of downside potential if we start breaking lower down. Again, on the short term, we are in a uptrend. The uptrend is likely to continue. The higher we go, the higher supports we start to develop, the lower the probability of these massive drawn down corrections. If we do take a look at Bitcoin really quickly from a historical perspective, we do generally see large corrections before we break into that bull run territory. So we'll show you. If we take a look at the bull run territory, and we described in yesterday's video, I'm not going to go over it again. If you want to learn about how when the bull run starts or what the bull run actually is and how we can validate whether or not the price action is in a macro uptrend or a bull run, watch yesterday's video. But what we see generally, before we close a monthly candle above our respective dotted trend lines, we do generally see a correction from that level. We saw back in 2016, a 30% correction, only then to break above and officially enter a bull run. That is when we actually officially entered a bull run, and we saw back in 2020, again a rejection, a 45% correction, only then to break above and enter a technical bull run. So in this instance, that dotted trend line is sitting at 48K. We could potentially see a rejection from that level. Now remember, if we do push higher and if we do push up to 48,000, the rejection will have less of an impact. Say we see a 30% correction from where we are. That would take us all the way down to $30,000. But if we see a 30% correction from all the way up back at 48,000, that would only take us down to 34. Now, the difference between those 2 points, you may think, well, it's not that much of a difference. If we do see a 30% correction from 48,000, that would not result in a breakdown of the bearish trigger point at 33.33, because the bearish trigger point, remember, results in a continuation. If we take a look at the bearish trigger point, sorry for the mess over here, you can see the bearish trigger point will result in a correction to $30,000, breaking that VRPV gap. So the difference between the rally and breakdown from 48K in comparison to a correction from this point is going to be an additional 15% correction for Bitcoin. So very significant in terms of that. Anyway, thanks for watching, guys. We'll leave it there. I hope you have a fantastic day. We'll catch you guys in the next video on Sunday. Before we go, check out the Crypto Academy courses. It is going to be the link down below. It's a 10-unit course. We teach you guys how to do TA. We teach you how to analyze charts. We give you some basic trading tips, and it is everything you need if you're interested in learning technical analysis, particularly from a new perspective. Thanks for watching. Catch you guys in the next one. Cheers.